All right, so welcome everyone. Good morning. Thanks for joining us during the invoice training presentation that we have put together for you. You can go ahead and share the slides now. So as I said, this is an invoice training presentation. We're going to be going over components, processes, and reminders of the invoicing process. I'm Luis Nunez, and I'm going to be presenting this with my colleague, Kayla Williams. Next slide. So hold on, let me turn off. Okay. So this presentation is going to cover general invoice information, invoice components, which we are going to be covering the claim voucher, the payment request form, the general ledger, and when to bill costs. And then also we are going over the backup requirements. There are some expenses that do not require backup, and we'll go over that. We will also include helpful hints to make the invoice process a little bit easier on both sides. Then we will cover information on the budget, and this will include how to make changes to your budget, and we'll go over what a unilateral budget modification is and how to request them. And then lastly, we'll go over program information, which is going to include arrears, past debts, costs that are not identified in contracts, and how to request approval for those costs, and then also differentiate flex funds versus essential needs. Next slide. Okay, so the general information. These invoices are covering costs that are going to be paid as a reimbursement basis. The invoices are due the 15th of the month following the services. And then if you need a adjustment on that schedule, you can reach out to the Clark County program staff, and we can work with that. And then could everyone please have their mics muted, just so nobody loses any of the information? Thank you. So the invoices are paid 30 days after the receival of a completed invoice packet. First, when you submit the invoice packet, the program coordinators are going to go over all the information provided and review for eligibility and allowability. And then if there is no issues with the backup that is included, then we send it over to the finance staff, and they will verify costs, the amounts, and the physical documents that are provided. If everything's good, then it should be you should be paid out 30 days after everything is completed. Next slide. All right, now covering the parts of the invoice. The first page of the invoice packet is called the claim voucher. This on the right is what it looks like. There are some components that I'm going to be covering. So each claim voucher, or CV, is going to be different. The number is going to be unique to each invoice. And to please make sure not to reuse a number, or else we're going to have to request a new claim voucher to be submitted. County staff will provide these claim vouchers to you, so if you run out, just reach out and we'll send them through email. The claim voucher has to include some important information. So the first is the contract number. This would look like, for example, 2023 dash the funding source, like House Bill CHG dash, and then the number of the contract. Then the billing period. This is going to include the month of the services that you are billing for. And then the provider name and address goes under that. And right to the right of that, the date. Please include the date of when this is submitted. And then under the description of services provided, we are looking for a brief description of those costs. So it could look like, for example, homeless outreach services provided in November 2023. This just lets us know what these costs are for. And then lastly, an electronic signature or signature statement in email. This is vital. We cannot process these claim vouchers without that provided.
Luis, I would just like to pop in real fast and add on the description, what is helpful for me that some providers do is they will match their description of services with the fund category. So the operations for that program, the case management for that program, the admin for that program, and it clearly separates the description of the activity with the funding source. And it's just a little easier for us to consolidate and confirm that way.
Yeah, that would be great. Next slide. All right, so information on the payment request form, or PRF as we like to call it. These are Excel documents that are provided by the county, and it matches your budget for the contract. This Excel document is used to keep track of your spending. It also lets you know how much you have remaining in each category for the budget, the budget of the contract. It includes some different sections that we're going to go over in the next slide. And then each month you're going to be completing the correlating month. So if you are submitting a July invoice, you'd be filling out the July row on it. And then please make sure that the total amount of the invoice total matches the GL and the claim voucher. And we'll show you in the next slide what that what I'm talking about. And then these the payment request form does not need a signature, but there is a section on the bottom that has the contact information, which would be the contact person and then their email. And this just gives us the ability to reach out to that person, whoever filled out the PRF, if we have any questions later. Next slide. So this is an example of the payment request form. As you can see, there are rows for each month of the life of the contract. Each time you are submitting an invoice, just making sure that you are filling out the associated months to that invoice. Then there are different columns. The first column is a CV number. This number is going to be matching the same number from the claim voucher that's on the first page of the invoice packet. And then, as you can see, there are different categories. There's rent assistance, other rent, and these are all going to vary depending on the categories that are spelled out in your contract. And this is actually a perfect example of a contract that has multiple funding sources. As you can see, the rent assistance has CHG, House Bill, and then the CHG, CHF. These are, it's important to make sure that you are spending out the correct funding source first. As you can see at the bottom left, there's a little section that says spend CHG, CHG, CHF first. This is vital, making sure to spend out that category or that funding source first before you move over to House Bill. House Bill is the local dollars versus the grant dollars. And then another thing to note on this is the admin spending section. Since this example only has one type of funding source for admin, so all admin would be spent out on that one. On the far right, the admin spending has a percentage and this percent is important to keep following. So each time you are submitting an invoice, making sure that that admin spending is at 11%. If it's not, then program staff might adjust the total admin spending to equate that percentage. And then we'll email you to update your PRF with that new total. And then, I'm sorry, if you go back real quick, the adjusted balance remaining at the bottom row, this is just going to be showing how much you have left in each category as you move forward with billing. All right, next slide. All right, so the general ledger. This is going to be provided typically by your accounting software. This general ledger should include vendor name, description of that cost, dates of service, and the amount for each expense. And then when administrative costs are allowed, the contracts with local and state funds require either a cost allocation plan or cost allocation methodology and must be reviewed or approved by county finance staff. Agencies receiving federal funds who have a federal negotiated cost indirect rate or allocation plan must submit information to county finance staff. And then just to note, the description in the general ledger for each cost should clearly identify the task of that expense. And then some agencies put the month of the cost in the description, and just to make sure that that month is correlating to the correct billed month for that cost. Next question, or next slide, sorry. So when to bill costs. We are requesting that all costs for that month to be billed the same at the same time. So all September expenses billed in September and billed on the September invoice. There is room for accommodating late costs. And so if for whatever reason an item needs to be billed late, we need to verify that that cost has not been reimbursed previously on a different invoice. And then also making sure to label that expense on the general ledger as late bill. You could put a LB in the description, and that will notify us that this cost is being billed late. If a cost needs to be billed late, please provide your program coordinator any additional details as to why when submitting the invoice. And that'll just, that'll give us a heads up that, this cost is being billed late on the invoice. There are a couple hard deadlines for invoices, and that deadline will depend on the type of funding source. So, House bill contracts will have a different date than ARPA contracts or others. So, for example, I'm sorry, so the hard deadline kind of dictates what can be billed during that fiscal year or year end. So if there was a contract with a hard deadline of December 31st, we would not be able to allow any costs past December 1st. So if there was a cost that you did not receive the invoice until January, that cost would not be able to be reimbursed on that December invoice. There's nothing we can do about it. There's just a hard deadline that's being set by the higher ups, so we have to follow that. Ongoing operating costs. If they cross months, for example, if there was a cost that was from May 16th to June 15th, this cost will be billed on the June invoice. And it's just important to note that we cannot exceed 12 monthly payments of that type of cost per year. All right, next slide. Any questions thus far?
I have a question for you.
Sure.
If we have a federally negotiated admin rate of 14.9%, I'm wondering if we can bill that or if it's still the 11% that's on your slide.
So if it's federally assigned, that will.
Louise, can I jump in? It's
Yeah, go
Alyssa
ahead.
at DCS. For the federally approved rates, the only time we're required to allow the federally approved rate are on federal funds and if your classification is a subrecipient. Since these are state and local funds, the amount set in the budget is 11%. So billing 11% per month, I mean, you can bill the 14.6 per month, but you will never get more than 11% admin budget, so it will spend out quicker. Does that make sense?
Yes. Thank you. We'll bill at 11%.
Any other questions?
Karen at Share. I had a question about the claim voucher, and I don't know how flexible that format is. It's probably existed for quite a while. But since we process multiple invoices, when we fill in our name and address, it's multiple lines of copy paste. It would be super helpful, if possible, if that could be just one text box. I don't know if that's possible. But in my dreams, it would be nice to just copy paste our whole address block into that instead of doing it 3 line. That's just a suggestion if it's possible.
Okay, so I think there's an option on Adobe to add a text box. I don't know if that would conflict with how we process it. Kayla, Alyssa, do you know if that would be allowed?
I don't think that'd be a problem as long as the information is in there. However they choose to fill it in is fine.
Okay, cool.
I agree.
Thanks. It's a little
Yeah,
thing
thank
that
you,
will
Karen.
save a lot of time.
Yeah. Any other questions before we move on?
Yeah, one more, Luis.
Sure.
Back on the late payment possibility, you say we have to provide proof, but don't you guys have the prior invoices to see that we haven't double billed? And then what proof would we have to provide?
So that's just an extra verification, just to make sure. We do go back through invoices if there's a late bill, late payment. So we verify that, just as long as that we're all on the same page. And then also just providing that backup for that cost should be sufficient, and then adding a note that it's a late bill.
So when you meant, excuse me, the backup documentation, you mean the actual like receipt for the cost, not that we have additional backup that we never billed for it.
Right. Yeah.
Okay.
It's just a yeah. Yep.
I think RJ, when we're talking about like proof, it's really just that note on the GL. LB to us when you're putting late bill on your GL, that's signaling to us and our finance staff that your agency went through, you verified that you weren't reimbursed previously internally, and now you're letting the county know as well. So it just makes sure that not only have we gone through and done our due diligence to make sure that the cost hasn't been reimbursed already, but that you as an agency internally also went through the similar process.
Okay, like a great example is sometimes if my credit card only has one bill for a cell phone for $20, it makes more sense for efficiency of our fiscal staff to wait like a quarter. So if we bill my cell phone bill for the 3 months, we just put LB on 2 of those months on an invoice, and that should be suffice with backup documentation.
Yeah, as long as you're communicating that to your program coordinator and they're in agreement that that's an okay process.
Okay.
I have a question.
Sure.
Can you provide a bit more detail about what the cost allocation plan or cost allocation methodology is?
I
think that's an Alyssa question. Alyssa, can you jump in?
Sure. Your cost allocation plan would be something set up that you have in place for any costs that cover multiple programs. Some agencies do it based on revenue planned that they're going to receive in their fiscal year and then break out their costs accordingly based on the percent. Some agencies use actual expenditures that they receive in the month, then break out their allocated expenses based on their actual monthly expenditures. So you as a provider would need to come up with which cost allocation plan you are going to use, and that's the cost allocation plan that you would use throughout the life of that contract year. So it's how you're going to break up your allocated costs consistently over the annual contract.
Okay. And is there like a template for that, or is it just pretty it's fine in however you submit that?
It's fine in however you submit it. Some send it in an Excel version, some send it in a PDF, an explanation of how you came up with your cost allocation plan, and then an example of like if you're going off of your annual revenues that you're collecting, that you would send in that detail as to how you came up with it. If you're going to do your monthly expenditures, then that of course would change month to month. So you wouldn't be able to send in an overall view of what that looks like.
Okay, got it. Thank you.
Mm-hmm.
All right, we're gonna move along. There's gonna be time for questions after the presentation as well. So the next slide, we're gonna do a little knowledge test to see if you're paying attention. These are, we're gonna show the answers after this slide. So just mark them down or keep them in your head and then we'll go over them. So the first question is, you received a Verizon bill for services from June 21st through July 20th. The bill date is July 20th and due date is August 12th. When should this cost be billed? The second question, or I'll pause for a little bit. The second question is a multiple choice. When should costs be billed? A, all costs for the month should be billed together. B, by the 15th of the month following services unless otherwise specified. C, any time within the contract period. Or D, when the agency gets around to it. And then the third question is a true or false. County will only accept a general ledger from an acceptable accounting software. I'll pause for a couple minutes and then we'll switch over to the slide with the answers. All right, Kayla. All right, for the first question, so this cost should be billed with July expenses because the service ended in July. We are, supposed to, or I'm sorry, you're supposed to bill things when the services are rendered. So for the second question, A and B are the correct answer. So all costs for the month should be billed together, and they should be billed by the 15th of the month following services unless otherwise specified. And for the last question, this is false. The county is pretty flexible with the types of general ledgers submitted. All right, moving along to the backup. So this, we're going to cover when backup is required and when it's not. We're going to start with the not required. So backup is not required for some expenses if there is sufficient information provided in the general ledger. So for example, for staff time and benefits, if the name, ID, or position, description, salary, benefits paid, and dates worked is provided in the general ledger, you do not need to provide backup. So staff time needs to be billed for the month hours that are worked, not when they are paid out. Give me 1 second. So if your agency has been billing us based on the date the employee has been paid, we're no longer going to be able to allow that cost, and we'll probably reach out to you to make the correction. If you have any questions about that, or if you need assistance on how to remedy that, just please reach out to your program coordinator, and then we can deal with that. For ongoing program operating costs, which are for facility rents, utilities, office phone, and stuff like that, if you provide the vendor name, the description of the cost, the dates of service, and the amount, you do not need to provide backup for those. Same thing with cell phone. If you provide staff name, the position or phone number, the vendor, the description of the cost, dates of service, and amount, no backup is required. And then for client rent, utilities, deposits, and application fees, if you provide the vendor name, HMIS number, the description of the cost, the dates of the service, and amount, you do not need to provide backup. So for refunds or credits, if you provide the description with the original date charge, you are not required to provide backup for that. And then it's important to note that the refund or the credited amount has to go to the same funding source that it was originally charged. So if there was a CHG essential needs cost, it should be reimbursed to CHG essential needs. And then for the refunds and credits, a brief description as to what and why the refund is occurring should be provided to the program coordinator when submitting that invoice. And this, will just give us more context for that cost. And then even though these do not require backup documentation, the agency is required to keep that information and the proof of cost on file for a minimum of 7 years, and provide that if it's requested in the future. So just keep that in mind. Next slide. So backup documentation is required for online purchases, such as Amazon or Walmart or any online purchases, and then also for general store purchases. The client services, which would fall under, some of the costs that fall under, flexible funds and essential needs, those do require backup along with the debt collection payments. So please provide that backup. Hotels and motel stays, if they're prepaid, they require backup documentation. Itemized receipts need to be legible. We need to see what those costs are on those receipts, and we're also looking for the date on the receipt. So just to make sure that that receipt is not damaged. I know there's some issues with sun damage for receipts, so please take care of those receipts and store them properly, so we can accept them in the invoice. And if we cannot read them for any reason, we will probably reach out to you to see if we can get a new receipt for that. So it just kind of creates a delay in the process. So if we get a perfect receipt first, that'll be the best. So we are not able to accept credit card statements anymore for itemized receipts. That's just we can't do that anymore. And one thing to note for online purchases, they cannot be billed until they are received. So the backup needs to provide the receive date, and that's when the item's in your hand. So we suggest for online purchases to be sent to the agency, and then you can, if there are an expense for a client, just send them to the agency, and then you can send them to the client, just so you have that receipt showing when you received it. Next slide. So backup documentation is required for staff travel and training expenses, and those costs should follow the county policies listed in the general terms and conditions, and they need to be approved by a supervisor. So any local travel within 50-mile radius of the work location, you need to include a log with the date, location, number of miles, mileage rate, program, and the description of that cost. And these are reimbursed at the current IRS mileage rate. Non-local travel and trainings, they cannot be billed until the training takes place, until the travel takes place. And then please include a itemized receipt for travel costs that are over $75. Meal reimbursements, same thing, itemized receipts to show the costs, and these are based on high and low per diem rates. All the trainings are going to require an agenda or a certificate of completion as backup. If those are not included, then we will be reaching out to obtain those. If for some reason you weren't able to get any of that information, then unfortunately we cannot allow those costs.
Hey, Luis.
Yes.
I thought that we didn't have to have itemized receipts for meals if we were doing the per diem rate.
That's correct.
Okay.
Okay.
And the itemized receipts, if the meals are in local travel, is when itemized receipts would be required for a business purpose.
Sure.
Out of the area outside the 50-mile radius is when per diem kicks in, and that's 75% the first and last day, 100% of the rate the days in between.
And then Luis had mentioned that costs are being reimbursed at the IRS rate. Are you guys, I mean, we as a state have the highest gas prices in the nation. Is there anything that we could do to help our team with the costs that they're incurring?
Unfortunately, we have to follow the IRS mileage rate. We can talk about this outside of the training if you want to explore some ideas or go over the amounts.
Okay, thank you, Alyssa.
Uh-huh.
Let's see. So staff expense reimbursements. These can be included in the invoice, but they must be business related and allowable per the contract. So when submitting backup for these need to include the date, vendor, amount, program, and description of those costs. And then also the itemized receipts. And these can be put on the same form as the mileage reimbursements. If an agency doesn't have a log or reimbursement form, the county can provide those. Next slide. Gift cards. Gift cards for stores or the Visa and MasterCard gift cards. These are not allowed. They have a high audit risk and potentially can be transferred for cash. And there's a lot more documentation that goes on with these. So we are just not allowing those. Laundry cards are allowed under the essential needs budget category. They're only allowed if they are explicitly showed that they cannot be exchanged for cash, such as vouchers and whatnot for specific laundromats. And then if there's no other option to pay for that service, and these do require a itemized invoice to show how many cards were purchased, and also a login sheet for the clients that are being given the laundry cards. Next slide. Renter's insurance. So I know there are some cases where apartments or clients or people that are renting from apartments are required to pay a yearly amount up front. Unfortunately, the county cannot reimburse you for the full amount, so they will need to be separated into monthly portions, and then you would invoice each monthly portion to that invoice. And then the renter's insurance has to be required by the lease, and then also showed on the general ledger that it's a requirement per lease. So on the description, you could put required by lease or something of that sort.
Hey, Luis,
Yes,
I'd just
sorry.
like to say and express the burden to do that puts on 12 months of reimbursement for a cost that we pay that's required at the beginning of a lease by the landlord to get our clients in. And I really stress, like, when policy can be changed, that we be allowed to just bill the full year if it's required at the beginning. And then if there's some kind of reimbursement, if they leave before the end of the year, we put a credit back on the contract.
Yeah, thank you for expressing that. I know it can be a pain, but there's also issues that we have to go through if the client is no longer in there, and then we have to reimburse that amount. I think this was just settled on because it's just easier, just an easier process.
Let's be
moving
very
forward.
frank. It's not easier for us. It may be
It
easier
is.
overall.
Yeah, it is just a requirement. So we have to pay out on when services are rendered. So paying out in the future, services have not been rendered. That lapse of time has not occurred. That situation has not occurred. If the client is found to be ineligible due to, an increase of income, or, they move out of county or whatever happens, that's a big risk for us paying something that hasn't occurred. So Alyssa, you're welcome to jump in as well, but this is just an across the board. We cannot pay for things that are occurring in the future.
Correct. And it's for our funding guidelines.
We don't dispute that. We are just hoping that we could find a better system to do this, because it is really burdensome to do this.
I just really want it clear, just make it clear, this is not our choice. These are our funding guidelines. This is what we get audited to. So this is not an issue where we have any flexibility.
I guess my hope is, if there is an opportunity to make change, that you are hearing our voice that could be relayed up to those that have the power on this. Because the landlords require it before move-in, so we have to front that money right then and there.
I hear your voice. We have no issue relaying it up, but also understand that Commerce is not coming up with it on their own. They're responding to what the SAO audits them to. And, what Kayla expressed in terms of providing paying for services that have not been rendered, that's just a reality of the audits. So, I think that Commerce will give you the same answer, will give us the same answer that we just gave you, which is that's the requirement we're under.
Okay, I think we can move forward on the next slide, please. So
Luis, sorry, before you move forward, I
Sure.
have my hand up open to, if y'all, if y'all don't mind, or if you'd be willing to send up an email to Commerce just as an FYI on the feedback, I'd be happy to reach out to RJ and also send an email, at least from YWCA, and if RJ, if you want to sign on to the email to Washington Low Income Housing Alliance, just letting them know that we feel it's a unequal or potentially even like a disparate impact on households receiving subsidy assistance to require payments in advance, and to maybe see if there's legislation that can be changed. But I mean, from the nonprofit side, we can contact Washington Low Income Housing Alliance. And if you're able to send up just an FYI email to funders, I think it would be just appreciated that we're reaching out and trying to bring up this concern for households that receive subsidies, because it's more of an impact for them versus households that can pay the full cost with private funds up front. So RJ, I'll send you an email.
Thank you, Beth.
Thank you. This is much appreciated, Beth.
Thanks, Beth. Okay, so okay, hotel and motel billing. So give me 1 second. Okay, so if you are paying in advance for hotel and motel billing, a folio must be included, and this is going to show the nights, the hotel and motel nights that the client is staying in there. Please make sure to either highlight or just signal some way of showing what nights are being billed to this specific invoice. The checkout and checkout dates need to be clear, and we need to make sure that they match the nights that are on the general ledger. The cost per nights and any applicable taxes and fees will be included on the GL. We cannot pay for any room service, which includes, alcohol, tobacco, or any of the other non-essential costs that are possibly incurred during this stay. So we can only pay for the nights and the taxes and fees. If the stay crosses a month, so if like they were staying from mid-June to mid-July, just making sure that you are billing June costs under the June invoice and July costs in the July invoice. And then paying after the stay, the GL needs to include the dates of the stay and HMIS number and the total payment with taxes and fees. And then just making sure to be consistent on the check-in and check-out day description. So one night would equal, let's say, from the 17th to the 18th. That would be one night. And then the next slide is just an example of the folio that could be provided, or that needs to be provided for the backup. As you can see that they provide the HMIS number on there, and then they redact any personal identifying information from that document. And then also highlighting the costs that are being reimbursed. So if you see the $200 Visa payment that was prepaid, and then the cash payment, and then the Visa payment at the bottom. So they're essentially, reimburse or billing for those reimbursements. Any questions? All right, moving along to the next knowledge test. So the first question, true or false, credit card statements are not acceptable in lieu of itemized receipts. Then the second question, which costs can be billed without backup as long as sufficient detail is available on the GL? Choose all that apply. So we have staff time, hotel, motel stays, office operations, such as utilities, rent, and IT charges, gift cards, mileage, client rent, deposits and utilities, and Fred Meyer purchases. And then the last question is a true or false. Renter's insurance is always allowed and can be paid in advance. A few seconds, and then we'll switch over to the slide with the answers. All right, Kayla, can you switch? So the first question, it's true. Itemized receipts are required regardless if a credit card statement is provided. And then the second question, so staff time, hotel, motel stays, office operations, and client rent, deposit, utilities are costs that do not require a backup. But for hotel and motel stays, only when they're paid post-stay. And then the last question is false. Renter's insurance may only be billed if required per client lease, and renters' insurance may only be paid on a month-to-month basis.
This is Karen at Share. Can I jump in with a quick question about the hotel motel stays?
Sure.
When are people doing post-stay payments? I didn't even know that was possible. Like
You have to negotiate it with the hotel. Like,
okay.
Yeah.
Yeah.
Gotcha. Thanks,
That's
Amy.
the thing.
Any other questions? Okay, moving on to the helpful hints. And these are just to kind of move the process quicker. It'll save some time and get you paid out earlier, or on time, I guess. Next slide. So the PPI, which is the personally identifying information, this needs to be removed or redacted from client information. I'm sorry, from backup, so it doesn't show any personal information of this client. That this can be substituted with the HMIS number of that client. If the PII is not included, or I'm sorry, if it is included, we might reach out to, get that redacted and then have you resubmit it. And then also making sure that the backup in the invoice packet follows the order of the general ledger. This is going to save time, so we don't have to, reorganize the entire packet. And some of those packets are, hundreds of pages, so it'll just save some time if it's already in order. And then it's important to, make sure you're billing to the right funding source. That will, cut time on having to reach out and notify you that, hey, we had to move some funds, and then also trying to figure out, which expense is going to which fund. So if all that is perfect, then, you're golden, and we can push that over to finance, and then they can pay it out. So if the if the contract has multiple funding sources and the invoice is being paid through all those sources at once, then we would like you to include a breakout to kind of show which expense is going where. This, speeds the process up for finance to figure out what is being billed where. And then also making sure that all the codes are matching from the backup to the GL. And the program codes could be, like a numbering system for your accounting software or program name. Yeah, all the costs on the GL should match the costs on the backup, just so we're all on the same page. And then, yeah, just it's important to know that, when you're in doubt, ask in advance. We are more than happy to help you with any question that you have. We have a great team, and we can, shoot out an answer pretty quickly. And if you are billing for an expense that you needed approval prior to making that purchase, please include that email with the approval as backup. It'll show, the county looked over the request and either or approved it if it's being provided as backup. Let's see. And then also, sometimes there are edits that are made to the payment request form. We will reach out to you and make sure that you have the updated version with those edits. And then just to make sure that you are updating your PRF to keep it up to date and matching what we have on records, so we don't have to, reach out again and let you know that some of the lines were not the same as what we have on record. And then obviously not including any backup that's not needed. So we are going to be sending out this PowerPoint, and then you can refer to it to make sure that you are including the backup that's required and not including the ones that aren't. Next slide. And then there are different options on how to submit the invoices. Email is the easiest method, but it's not super secure. So there are different options, such as SharePoint, Teams, OneDrive, and these will allow you to send bigger invoices. I know, like I said earlier, some invoices are huge and do not fit through an email. And sometimes you have to send multiple emails to just email one invoice. So these are different options you can take. Any questions?
I have a question. So
Sure.
going back to, it's vital that we spend the federal funds first, and then we spend the local funds. If we could look at maybe the spending sources and what expenses are supposed to go in those, like the block grant versus the housing, CHG and the CHF, and what the differences are. Sorry.
So yeah, no, that's fine. Typically those are going to be outlined in the contract. So for the CHF, there's that's for chronic homeless families, and that'll be spelled out in the contract when to charge something to that. So for that example, there might be an invoice that has both CHC and the CHC CHF being charged at the same time, but the CHF would have specifics on when to bill that. But that's going to be in the contract, and you can also reach out and we can like set up a call or something to go over that. But each contract will have that.
I will
Okay.
also add, Luis, that if we notice that you're billing a not priority category, we will probably reach out to you and ask you to move that to the alternative source that is the priority. For grant dollars specifically, those tend to have deadlines or dates that we have to expend those dollars by. Whereas our House bill and local dollars, they have more flexibility. So we're able to kind of carry those over on a more consistent basis. Grant dollars are use it or lose it, which is why we have to prioritize those.
Okay.
Thank you, Caitlin.
So we talked about ARPA funding. That's probably going to be in the contract as well, what category that is.
I'm sorry.
Is there
Could you repeat
still,
that?
is there still ARPA funding?
Yes, so there's
Yeah.
ARPA funding, and it's again going to depend on your contract and your service activities. So, a shelter might not have the same funding categories or service categories as a outreach team. But ARPA in general, that funding source is very broad and can cover a lot of different things. But your contract and your PRF will have your categories and your budgets broken out and will tell you where you can bill.
Perfect. Okay. Thank you so much.
Any other questions before we move on? Okay. Next, we have another knowledge test. I know we love these. So the first question is a true or false. The county staff are flexible with how invoices can be submitted. Second question, what items need to be redacted from all invoice documents? A, client names, B, HMIS number, C, client initials, D, client birthdays, and E, NEPII. And the third question, true or false, when in doubt, it's better to ask for forgiveness than permission. Maybe a few seconds, and then we'll switch over to the answer slide. Okay, we can switch over. And the first one's true. You can work closely with staff should you need to bill late costs. The second question, A, C, D, and E, those are all the correct answers, we would like you to redact all that and then provide the HMIS number instead of all that information. And then the last question is false. For costs not specifically called out in your contract, prior written approval from county staff is required.
A question on that one, Luis.
Sure.
If we get approval for one client for something that wasn't specifically outlined in the contract, does that open it up for all clients then in the future?
No, it does not. You would have to reach out. These are, yeah, you would have to reach out for each cost.
Thank you.
There are no blanket approvals. Yeah, no problem. The next slide. Moving on to budget. So we're going to be covering how to make changes to your budget and then what a UBM is. So if you if there is a need to make a change to the overall budget of the contract, whether increasing or decreasing, this is going to require a full formal modification, and this requires signatures from both the agency and the county. So for example, if the county recognizes that there is an issue with spending, we might reach out and kind of talk to you about it with our concerns. And essentially, if we both decide that we need to make an adjustment to the budget, we'll start that process. And then our contracts team will send out a modification for your signature, and then that'll change your budget. On the other hand, if there is a reason that an agency needs to move funds from one category to the next, such as rent to other rent, then this is called a unilateral budget modification. This does not need a signature process. This can be done in-house. This just requires the agency to fill out the portion on the payment request form. It's on the top left. There's a little gray section where you can put a UBM, and then you can move funds from one category to the next. It's important to remember that no funds can be added into the admin section, but on some cases, funds can be taken out of the admin category and into other categories. And just if you would like to heads up to the program staff that is overseeing your contract, that would be great, so we don't miss the UBM and just make sure that that budget is being taken care of. Next slide. When requesting a UBM, please provide the month and the CV number of that invoice, and then making sure that the adjustment is equaling out to 0. So if you take out 1,000 from one, you're adding 1,000 to the other. And then it's important to note that you can only move funding, you can only move money within like funding. So CHG to CHG, House bill to House bill. Like I said before, the admin category cannot be increased. It may be reduced in some circumstances. Program funds can never be moved into admin, and the generally operation costs can be moved into rent assistance, but the opposite is not true. Rent assistance may not always be moved into operations. So it's easier to check with your county staff coordinator, and we can figure that out. The next slide is just an example of what a UBM would look like on your payment request form. So as you can see, there's a date and then the CV number it's associated with, and 10,000 was added to the rent category, 1,000 was taken out of rent, and 9,000 was taken out of operations. So just to keep these consistent and equaling out 0. If you see in the far right, the little lines of 0, those means that they zeroed out. And then the second line shows a modification that $20,000 was added to the contract, and that's when the signature is required. All right, so next slide for if anyone has any questions over that.
Luis, this is Karen at Share. Is there a limit on UBMs if we're following all the rules? Is there a 10% limit on it?
Alyssa, is that 10% still applicable?
Yes and no. If it's within the grant funds, we do have a limit set from our funder. If we're moving too many funds, let's say from rent to operations, or rent has to stay at 40%. So it's kind of a yes and no answer to that. We would let you know if we can't do a UBM based on the funding source it's coming from, if that's going to cause any issues with us updating our budget with Commerce.
Okay. Ask for permission, not forget.
Correct. And if you have local funds on your contract, so if you have state funds and local funds on your contract, local funds, you can move those around as much as you want to. It's the state funds that are really specific as far as budget mods go. If you do stick to the 10% of moving funds around within your state funds, then we should be fine doing our budget mods to Commerce as well.
Super helpful. Thank you.
Any other questions? All right, let's move on to the next knowledge test. So first question, true or false, agencies can request a change to their budget during the invoice process. Second question, multiple choice. UBM stands for Updated Budget Mitigation, Unilateral Budget Modification, Unique Budget Mitigation, and United Budget Modification. And last question, true or false, county staff will provide an updated PRF after changes are made to the budget. A few seconds and then we'll switch over to the answers. All right, let's go ahead and go to the next slide. First question is true. Fill out the UBM line on the PRF when submitted invoices. Second question, the UBM stands for Unilateral Budget Modification. And third question is false. Agency is responsible for updating their own version of the PRF. But please update the PRF just so we don't have to keep asking you to do that, and then we can both be on the same page with the correct information. All right, next slide. And I think this is when Kayla takes over.
Thanks, Luis. All righty, on the program side of things, we're going to start with arrears and past debt. So agencies need to verify that it's allowed in their county contract before paying for it. When paying arrears to the current landlord, include it under the rent category. When paying arrears to a previous landlord or a collection agency, there's a few additional requirements. So the payment needs to allow the household to obtain permanent housing, and that should be verified in writing by a third party. There are circumstances in which we might accept a verification that's not in writing, but please reach out to your program coordinator first to discuss the attempts that have already been made. I know sometimes landlords are a little apprehensive about providing things in writing, but for the most part, we have been successful in getting them to jot over an email saying, yeah, this is why they were denied, and paying their past debt will allow them to be accepted for this housing. Costs that are paid are limited to housing related expenses. So say a household previously got evicted and they owe back rent and it went to a collection agency, that would be allowable. Debt not relating to housing is not allowable. Backup documentation should itemize all charges owed. And then again, you'll include the cost under the rent category. If past debt is not housing related, then we need to go through a different avenue. It has to be billed under flexible funds as opposed to rent. And then that needs to be verified in writing by the third party as well, that the payment will allow the household to obtain permanent housing. Costs that are not identified in the contract need to get approval from your county contact before accruing the costs. So that's again, ask for permission, not forgiveness. Costs that are not approved in advance will not be accepted. Include your approval email with your invoice submission. Costs that aren't directly tied to housing stability will not be approved unless previously discussed and worked through with your program coordinator. If a cost is approved for one household, it is not a general allowance unless county staff state otherwise. For staff to make an informed decision, include the questions and responses from the next 2 slides in your request. This is a book. I'm not going to read every bullet line by line, but please answer all these bullets when sending in requests for items that aren't identified in your contract. So here's a list of the questions that we need to answer. Some of them might not be relevant for your request. So if it's not relevant for your request, you don't need to fill out that question. But if it is relevant, these are all of the bits of information the county needs to assess whether or not we will allow this cost. And then there's another page as well. So we can send this out in email form, but it will be included in the PowerPoint slides sent out after the meeting. Flexible funds versus the essential needs category. So more contracts allow for flexible funds and essential needs purchases now. All flex funds and essential needs need to be included in HMIS. They're required itemized receipts with their descriptions. Flex funds are available to help a household increase housing stability or meet essential household needs. So this is a little bit different. If you guys previously remember, flex funds had to allow the household to obtain or maintain permanent housing. Commerce has since updated the guidelines, and now flex funds are available if they're helping the household increase their housing stability in general or meet essential needs. So funds can be used to help households increase income. That needs to be directly tied to increasing income, not in hopes of achieving employment. So an example could be a client needs a pair of work boots in order to engage in the job that they already got an offer for. Not a client needs a pair of work boots because they're going to apply to a certain job. They can be used to pay for identification, obtain cell phones and service plans if no other options are available, and then storage fees during the housing search process. Essential needs are available to all households, and they do not require documentation in your housing stability plan. Funds can be used for personal health and hygiene items, cleaning supplies, transportation assistance, client fuel expenses when purchased with agency cards, by agency staff, or with pre-approved vouchers. Costs for items necessary for life or safety to address an emergency need, essential household furnishings, laundry cards, and not included on this list, but I did want to note is these essential needs and flex funds do also include culturally specific services for households. And if you'd like more information on what that looks like or would like to request approval for that because it's not specifically called out in the contract, just reach out to your county contact and we can discuss what that looks like. Do you guys have any questions about those?
Hi, it's Karen again from Share. Back on the arrears, what if the arrears are paid to a current landlord but are somehow out of the period of performance? Does that still apply under rent?
What do you
So
mean
say,
by the period of performance?
so say for example, the contract started July 1, but we're paying arrears from May.
No, that's totally fine.
Got it. So that's under rent, just like everything else.
Yeah, if it will help the household achieve that housing stability, access their permanent housing, and it's verified by a third party.
Okay. And then hotel motel stays, if the contract specifies that hotel motel stays are allowed, do we still need to get flex fund approval? Not flex fund, but do we still need to get approval for the stay?
Not if it's allowed under your contract.
Okay. And now that flex funds are allowing essential needs, how is that different? Like when would we call something essential needs versus calling it flex funds? That was just a little confusing because there's already essential needs allowed.
Yeah, it's a little odd. Commerce includes essential needs under flex, and technically flex and essential are both buckets included under operations for the most part. So it's like one big broad category. We separate it out within your contract, so you'll have a description of what flex is and what essential needs includes for the contract purposes. The SDG guidelines online that all of our contracts follow also break these out more clearly. But essential needs is pretty much anything that's necessary for a household or you or I or anyone to obtain. So, food, if they have a specific diet, they need to meet, shampoo, conditioner, things like that. That's accessible to everyone in the program and doesn't need to be documented. Flex funds would really be more of a household specific need that isn't a need that is accessible for everyone in your program. And that's why kind of the debts will fall under flex funds a lot of times, because it's specific to a household situation and ability to obtain permanent housing.
Can I jump in really quickly, Kayla? So
did you just call me Rebecca? Absolutely not.
Kayla. So internally, whenever we get questions in terms of a flex fund versus essential needs and stuff like that, like we look at the SDG guidelines section 7.3.3, flexible funding. And when I'm asked to evaluate, is this an essential need? The paragraph, it's the second paragraph under 7.3.3 says, essential household needs means personal health and hygiene items, cleaning supplies, transportation passes, and other personal need items. So that's the grouping that, when I'm asked by county staff, my take on is it essential needs? That's the sentence I'm looking at. And if it's not, generally, I'm going to say that's not essential needs. Flexible funds are not going to be ongoing assistance, and they are going to be paid for a third party, and they are going to need to be listed in the housing stability plan. So like if you want to charge something for flex funds, don't look at flex funds as just like, it's flexible, this means I can use it to pay for that. If it's not important enough to be specifically called out in your housing stability plan as something that you are going to be paying for the housing stability, it's not going to be eligible as a flex fund. And I hope that's helpful.
Yes, and there's no longer an annual fiscal year limit on flex funds, right? Great, thanks, that is helpful.
Any additional questions before we move on? Go ahead, Beth.
We're still good to put internal limits on flex funds because of budget restrictions, right? That's still a reason. Okay, thanks.
Yes, yeah. All right. Another knowledge test. So true or false, agencies can request permission for costs not explicitly identified in the contract at any time. 2, which statements are true when billing rental arrears, rental debts, and other debts? Choose all that apply. A, paying rental arrears to the existing landlord under rent. B, paying rental arrears to the existing landlord under flex funds. C, paying rental debt to a previous landlord with an itemized receipt bearing paying costs or housing related other rent. Ignore the other rent. Other rent is actually no longer a category that Commerce separates out. So other rent and rent will be banded together. So if you've noticed, sorry guys, sidebar, if you've noticed that we're not emailing back and forth and switching those around anymore, it's because technically they're merged. We're just waiting for new contracts before we make the change, so we don't have to do 50 modifications. D, paying any debt to a collection agency under flex funds. And then question C, true or false? Essential needs purchases are available to all households and don't require documentations in the HSP. And I'll give you a few moments before we move on. Okay. So question 1 is false. Agencies need to ask for approval before accruing the cost. Question number 2, the correct answer is A and C. You can pay rental arrears to the existing landlord under rent, and you can pay rental debt to a previous landlord with an itemized receipt under, it's going to be a rent as well, so ignore that other rent. And then question 3 is true. Housing stability plan, or the essential needs are not required to be documented in housing stability plans. Okay, any additional questions before we log off? And this can be anything while we're all here if we have broader questions or anything we didn't cover.
Okay, I'll ask. So on the question about paying the collection agency or the attorney for like clearing out bad debt so people can get into an apartment, are all those costs covered?
Alyssa?
Can you repeat the question? Sorry, what was that?
I'm going to turn up my mic a little bit. Okay, so if a client has to pay off bad debt in order to get an apartment and be approved, and they've hired an attorney to do that or a collection agency, are all of those costs covered? Or do we have to like go out for permission, make sure that this will be, or is it just not covered?
You would refer to your contract. I believe that collections to a collection agency are allowed. I don't know about lawyer expenses. That's something we would have to reach out to Commerce and ask specifically, but we have covered collections and collections to the landlord or collections to a collection agency in order to keep the participant housed. Did that answer your question?
Yeah, I think it might be on a case-by-case basis. If we have a client that needs to clear some bad debt or has to pay a cost, and how much of that will be covered or not.
Correct.
This is
Yeah,
Michael again, and that's
okay.
definitely a case-by-case basis. It really will be, and we will look at the guidelines under it. In general, if the contract and the program is about housing assistance and rent assistance, it's not about debt relief. So in general, unless the debt, clearing that debt can directly be linked to getting person in the house in that specific case, do not look at this as a source to pay past debt. Like that, like you want it to be as clearly linked as possible. So if you're dealing with a situation where a landlord says, hey, this person's credit rating is X, if only it were a point higher, like I would approve this. To me, that's not good enough reason. It would be like, hey, this person owed me or owed this past landlord who's a friend of mine, like this thing, and unless that gets paid off, I'm not renting to this household. That would be a debt that you can link in and you can get in writing that is the reason that it's going to be cleared. But do not look at these contracts, these housing related contracts in general, or flex funds as an opportunity to clear debt. It's going to be much more case by case. And when asked about it, that's the kind of linkage that internally the county is going to be looking for that you can prove.
Okay, and it sounds like we have to have it in writing from the landlord that this is a direct link, clearing the debt. So that answers my question. Thank you.
Do we know when January invoice deadlines will be?
Another Alyssa question. I think it depends when our deadline that Commerce gives us is. So depending on how early in the month in January that is, that'll change. And same with June invoices for July.
But they haven't told you what that is going to be this.
Are you saying December and June for calendar year end and state fiscal year end? Is that what you're asking about?
Mostly I'm just looking at planning for the holidays. So
Right. Well, if you can plan to get your invoices in by the 15th of the month following your December invoices in January by the 15th, our calendar year end for the county is a lot more lenient than our Commerce state year end deadlines. We just got notice from the county about our calendar year end deadlines. So once we back into those, we'll be sending out email correspondence to let you know when all of your 2023 expenses are due by to get reimbursed for. Normally the state, we have until for us to get our billings into them, it's the 15th of July to get all June in. So we normally give you guys until the 8th or the 10th to get everything into us. But we'll follow up with emails about this calendar year end once we back into a date.
Great, thanks.
All right, I think if there's no other questions, we will dismiss you guys, and I will get the presentation and the recording out to everyone who's on the invite list as well. So expect that hopefully by the end of the day, but if not, definitely early next week.
Thank you, everyone.